Hi, I'm Brooke Thackeray. Welcome to What's Hot and What's Not in the markets in the month of June. Before we take a look at June, let's go back and take a look at the action in May, because there was a lot of sector rotation taking place, which could give us some clues to the performance for June. So let's start by taking a look at the performance of the broad markets last month. Here we can see that the S&P 500 was fairly flat. The S&P 500 was actually produced a return of 0.55%, and the S&P 500 has been really fairly flat since April. The peak for the S&P 500 was May 7th at 42.32. We're just below that right now. We are seeing some positive momentum in the stock market, which is actually fairly good as far as price action goes. But if we take a look at some of the action taking place here on the momentum indicators such as RSI, we are seeing it trend down, and the full stochastic oscillator trending down as well. Now the S&P 500 doesn't tell the whole story because some of the sectors of the markets have been performing quite well. If we take a look at what's taking place in the broad markets here, you can see that the S&P 500 had a 0.55% gain in May. Look at the Canadian stock market, up 3.9%. That's huge because the Canadian stock market's been underperforming for so long compared to the S&P 500. It was interesting to see the Canadian market perform well. Now that was largely based upon the Canadian banks performing well and some of the cyclical sectors of the market performing well. NASDAQ was down 1.5%. Look at the Russell 2000, just barely above positive. If we are to see a strong rally in the markets, we'd like to see the small cap sector actually participate as well. If we take a look at the sectors of the market here, you can see here that well, let's start by taking a look. Here's the S&P 500 as a reference point. And if we take a look at some of the growth sectors, they've generally underperformed in the month of May, or didn't perform that well. Look at technology here. It was almost down almost 1%. So where's the money going? Well, some of the cyclical sectors here actually benefited last month. And you can see here the industrial sector performed well, the materials, energy, financials. They all perform well. This is while interest rates were fairly flat, which is a good sign, a positive sign for the overall markets. But it's interesting to see that the defensive sectors actually did quite well, ex the utilities sector. Now, the utility sector had performed so well back in March. It's really been, relative to the S&P 500, it's been pulling back since then. But if we take a look, we saw real estate outperform the market, consumer staples, healthcare outperform the market as well. So money's been flowing out of some of the growth sectors, mainly into the cyclical sectors, plus also some of the defensive sectors at the same time. If we take a look at some of the sectors of the market here, subsectors I should say, you can see here that look at the beneficiary again. Here we got gold performing well, silver performing well, the metal sector performing well, steel performing well. This is largely being based upon the narrative in the stock market of the reflationary trade, or inflation really coming into play as well. If we take a look at the VIX last month here, we can see that the VIX really, if we take a look here, it's a key line that everybody tends to watch, which is 20. I just crossed it out, but you can see when it crossed 20, the VIX crossed 20, we saw the market pull back a bit. When it went below 20 here, the market started to go back up again as well. Right now we're below 20, which is a fairly good sign for the market, showing that investors are comfortable as far as the expectations in the stock market go, as far as risk goes. If we take a look at the small cap sector here, we can see here the small cap sector. Look at this. Since March, when just after it outperformed in a strong seasonal period, it's really been underperforming here. We'd like to see if the stock market's going to continue to move higher. You'd like to see the small cap sector participating to show that this is a sustainable rally. That hasn't taken place yet. If we take a look at the bond, so this is the interest rate on the U.S. Treasury note, the 10-year Treasury note. Here you can see that since the end of March, it's been heading lower. So there's been so much talk about inflation. We saw CPI come in at 4.2%. We saw PCE come at 3.2%. So both higher than expected. And so there's been a lot of talk of inflation. The main media has actually been talking about inflation as well. But the bond market hasn't been buying it. Interest rates have been moving down. If you saw strong economic growth and inflation expectations increasing, you would expect the interest rates to move up. And that hasn't been the case. That may change, but so far that hasn't been the case. So bond investors aren't buying what's taking place right now. So we have a little bit of a divergence taking place. If we take a look at the, let's go back and take a look at what's taking place in the month of June and what to expect overall. So I'm using my Thackeray's 2021 Investor's Guide. And for June, this is the average month for the S&P 500 from 1950 to 2020. Every month is different, of course, or every year is different for June. And you can see here that you tend to get a rally at the beginning of June. It tends to be fairly flat, and then a correction that takes place and then bottoms towards the end of June. And then we start to see it rally at the end of June. Now, this graph here shows the daily probability of gain trading days over the same time period overall. And you can see here that we tend to see the weakness take place a little bit later on in June. But I want to point out that really the last few days in June, entering into the broad stock market positions, can actually perform quite well, because there's an effect that takes place where investors tend to push up the stock market ahead of earnings. And I've written about this back, and I call it it's a mouthful, I know, the 18-day earnings month effect, okay? And that really means that in the first month of the earnings season, as it gets underway, the first 2/3 of that month tend to perform well. January tends to be positive. April as well is another earnings month. July as well, which I'll talk about in a second, and October as well. So coming into July, earnings season, you tend to find that the first 2/3 of the month tends to be positive for the stock market. And this is from 1950 to 2019. You can see that here, the average gain was basically 1%, and the frequency being positive was almost 70%. So despite being in this 6-month unfavorable period for the stock market, this mini period here for the last few days in June, coming into the earnings season in 2/3 way through July, tends to perform well. So there could be some broad market opportunities coming up, particularly if we do see a correction taking place. If we take a look at some of the sectors in the marketplace, let's go back here, let's take a look at, let's jump back here and take a look at what to expect, okay? So from a seasonal perspective, which sectors tend to perform well in the month of June. So from 1990 to 2020, the healthcare sectors performed quite well, outperforming the S&P 500 65% of the time. June's a funny month because sometimes you see a cluster of sectors that tend to outperform the S&P 500 on a fairly regular basis, but that's not the case with June. If you take a look at information technology, actually tends to, because this is ranked by average performance on the month, so you can see going all the way down, and this is frequency of outperforming the S&P 500. Most of the time, the technology sector doesn't outperform the S&P 500 in the month of June, but when it does, it tends to outperform at a fairly strong rate, and that's why you see it ranked up to top here, because it doesn't outperform that often as well. On the weaker side, you tend to find some of the cyclical sectors down here at the bottom, and so far the stock market has really been cyclical sectors because it's all about inflation, and but from a seasonal basis, that's not the case. So we'll have to see which battle wins here. We have seen the stock market really doing some spurts of outperformance, particularly with the seasonal sectors, cyclical sectors, and then pulling back a little bit. If we take a look at some of the subsectors here, you can see the pharma sector tends to perform well in the month of June as well, and that backs up the healthcare sector as well. Retail as well. Gold about half the time, and it's fairly flat overall for the month of June. So the month of June for the stock market tends not to be a strong month for the stock market. So I want to say that gold starts its seasonal period in early July, and we've seen some strength in gold, and I'll talk about that in a second. But gold can actually start to perform well in June as well. That could be the case this year, and we'll talk about that. Some of the weaker sectors, silver. So I've just talked about gold being a strong performer and outperforming gold, but silver tends to underperform in the month of June, and that really comes down to more from the industrial component of the silver sector. So that's the cyclical sectors tend not to perform that well. I know that's not the case right now, but we could see that change a little bit later on in the month. And also the banks tend to underperform the S&P 500 as well. Let's take a look at some of the sectors in the stock market here. If we take a look, here's healthcare. Look at healthcare. Healthcare, after outperforming the S&P 500 for so long, we saw that, well, back, I should say, as the pandemic started, it's so long has been underperforming the S&P 500, and we have seen that a little bit of a rally take place, and it outperformed in the month of April. And then we have seen that little bit of a pullback for May. If we see a risk-off move, investors could once again favor the healthcare sector. If they're sticking to the cyclical sectors, the healthcare sector might underperform for the first part of June. If we take a look at let's take a look at gold, because gold has a strong seasonal period, starts on July 12th and runs into early October. And but in recent years, we've seen the gold sector start to outperform in the month of June. This year, we start to see on an absolute basis, really in April, towards the end of March, we've seen gold actually start to pick up here a little bit. And that's really been because interest rates have flattened out and investors are taking a stronger look at gold overall. And here you can see the outperformance relative to the S&P 500. The caution I'd have right now is on a RSI basis, we are overbought, and we could see that actually turn down. And also on the full stochastic oscillator basis, we are overbought as well. It doesn't mean that the gold's about to underperform or go negative here or start to lose ground, but it means it might be a little bit susceptible in the shorter term to some sort of a pullback. But gold tends to be volatile in the month of June, so if we do see some downturns, it could be an interesting opportunity to actually enter into the sector before the start of its seasonal period. If we take a look at the biotech, now biotech has a really strong seasonal trend from June 23rd until September the 13th. And sometimes we can see that biotech sector actually start to outperform the S&P 500 a little bit early. And recently what we've seen, well, let's take a look on an absolute basis. We've seen the biotech sector really in this trading range, and we've seen this uptick relative to the S&P 500 and then a pullback. Now, it's going to be interesting because we have seen this breaking down, breakthrough of a downward trend line. It's really in a consolidation pattern here. So this could be an interesting setup if investors start to move away from some of the cyclical sectors. The biotech sector would probably be one of the beneficiaries from that. If we take a look at the materials sector, the materials sector tends to perform poorly in the month of June. Now, look at the performance, the relative performance for the materials sector. Now, this is the U.S. materials sector, so it's about 70% chemicals in the index here, or the ETF that I'm using. Here you can see strong outperformance and then underperformance, and really rapid outperformance at the beginning of the year. Sorry, that line was a little bit off, and then underperformance again, and then strong outperformance, and then we're seeing underperformance once again. So we might see some further underperformance in June, particularly if investors move away from that narrative as well. Also, I just want to point out if we take a look at the Canadian banks, because they did perform well last month here. And here I'm using ZEB for the Canadian banks. Look at the outperformance relative to the Canadian stock market. We've seen that really since April, that outperformance. This is outside of the seasonal period. We are seeing here the sector has become overbought as well. Once again, it doesn't mean it's about to turn down, but also too with the full stochastic oscillator as well. Now, on a seasonal basis, banks tend to be one of the weaker performing sectors in the month of June. Now that the Canadian banks have largely gotten their earnings out of the way and it's priced into the stock, we might actually start to see a little bit of softening in the Canadian banks, particularly if we see interest rates head a little bit lower. If we take a look overall at the month of June coming up, it's here we are close to all-time highs. We're seeing a little bit of momentum from a price perspective in the markets. Technically, on the momentum indicators, we are seeing a little bit of a divergence as well. The narrative really is about the inflation, economic growth, and inflation, reopening of the economy all coming together. We have seen strong economic numbers coming out of Asia recently, which is helping to bolster the commodity side of the tables here. And if we start to see now this could continue on for a while longer, but on a seasonal basis, we tend to see the cyclical sectors not performing that well. And bond investors aren't buying it right now. They're not jumping up and down and starting to say, well, let's bid the price of the interest rates higher if inflation really is there. And there are some sector opportunities coming up in the marketplace. We talked about a couple of those. Gold could be a good opportunity ahead of its seasonal period. Biotech also as well. And from a broad market perspective, we could see an interesting opportunity develop towards the end of the month, particularly if we see a pullback in the market. If the market does pull back, and we could see an interesting opportunity for the last few days in June into, let's call it 2/3 of July, until the earnings season really starts to get underway as well. So lots of action happening in the markets. It's an interesting time, once again, as the markets tend to be rotating back and forth. And let's take a look and see what happens in the month of June. Thank you very much for joining me today.